Hey folks, Bob Desmond here at the Contrarian Trader. Sorry I'm late. YouTube would not let me go live. Um, had an issue there. Strange. I was wondering whether or not it was because of the title of the video. So do you short China or the USA? TA, hey brother, welcome. All right, so what we're going to do tonight is we're going to go over the weekly charts. We're going to see how we're poised to close out the week. I'm going to preface this by saying, one day can mean a lot. So 4 days are in the books, but we know that the look that a weekly chart may have right here, right now, may look one way, but by tomorrow's close, could look a lot worse or a lot better. So on Saturday, I'll send out the week ahead commentary to members where we do a recap of the closing price action of the stock market, and we'll formulate a strategy of how we want to position into the new trading week based upon how we closed out the prior week. We'll also talk about our focus stocks, so please join us. 14-day free trial offer if you're not currently a member. Andy, hello? Is there a tool way to search stocks with similar chart patterns? Yeah, you can do that. I think Thinkorswim definitely has it. I believe you could do it now with TrendSpider. They do have strategy testing, so I haven't checked for. I know you can do pattern recognition on each symbol on TrendSpider. I don't know whether or not they probably can now. Whether or not you could do it across the entire spectrum of the market. But if you're interested in TrendSpider, use the link below. I'm an affiliate, 25% off. Use discount code TC25Z, and that'll get you 25% off forever. John, good evening. Will, hey, brother. Okay. Let's get to it. The concurrent users is inaccurate. I mean, this morning I went live and it showed that I only had 2 users that were on at any one given time. And then when I checked my stats after, it showed that I had like 30 people on, actually 54 people on at its peak. So YouTube is kind of messed up today. It showed that I had like 30 people on. That's me. Okay, sorry about that. And it's not showing in chat. It says 11 watching now. All right, so something's going on with YouTube tonight. All right, so let's go to the weekly charts. A volatile week, no doubt about it. We'll kick things off with the yield curve. I don't even know why I go over this anymore. The Federal Reserve has come out and said they're going to manipulate it. And why not? They can. So why is the yield curve important? It's important because it allows you to find fair value. It indicates what the bond market is implying about the health of the economy. And when you have a steepening yield curve, generally stocks are weak during that environment. We're seeing a steepening of the yield curve. We'll go by the assumption it's not yet being manipulated. We're seeing it steepen. We're off the highs of the month so far. Going to a weekly chart, let's change this time frame. It's sloppy. The weekly chart it's an inside week. No new high, no new low. We're in an uptrend here, so odds favor bulls as we proceed into the back half of the week. Now, that won't bode well for stocks. If we continue to see a rising yield curve or steepening yield curve, that's not going to be good for stocks. So the Federal Reserve is going to have to get even more aggressive. Oliver, hey, brother. Good to see you. The TLT. Now, this is a 20-year bond. We're short of the bond market. I have been short, but only to get some skin in the game to the short side. We're using the TBT. And I want to get my annotated charts here. So forgive me. All right, so weekly chart. This is a daily chart. All right, so we're down on the week. We're consolidating. No new weekly low, an inside week. So it looks as though this is a pause that refreshes. That in all probability, what they're going to do is they're going to rally the bond market yet again, driving down yields and putting a bid under the stock market. Hey, Richard. Tommy, hello. The Treasury yield. Rick Roofing, haven't seen you in a while, brother. How you doing? Tommy, gold got a correction. Would you give advice, good entry point to buy gold? Sure, we can go over that. I like the 4-hour chart on gold. I think that we may bounce here. I did some buying today of the miners. Not much, just nibbled. All right, so weekly chart of the 10-year yield. Extreme volatility. I've gone over this before, but it's worthy of repeating. Last week, we gapped up higher to open at spot 7.3. By the end of the week, we were hammered, trading back down below the breakout point. What did we do this week? Gapped up again. Where? To spot 7.3, right? So what you're seeing here are the bond vigilantes coming in. The Federal Reserve can easily manage short-term yields. The 3-month note, 5-month note, going out to a 1-year, 2-year, they can manage it fairly easily. It's a lot harder for them to manage. I have a window open here somewhere that's making that noise, so I apologize. It's far harder for them to manage the 10-year yield, the 30-year yield. It's a far bigger pool. So it's harder for them to manage that. And you're seeing a tug of war begin between the markets and the Federal Reserve. And Oliver says, smash the like button, please. Yes, please. Thank you. I would have forgotten again. So a tug of war here. Now, one of the threats to the market, actually two of the threats to the market, I'm going to go over a chart of Yang, which is the short ETF of China. That is a threat. A lot of headlines out there. It's pretty scary, to be honest with you. The other threat is if the Federal Reserve cannot control longer-term yields. If that gets away from the Federal Reserve, there's going to be a problem in the stock market. So those are the two concerns I have that are major concerns and that are real concerns and happening right here, right now. The tips continue to move higher. Stiff resistance at the 122 mark. And it was Tommy who asked me about gold. To see gold continue to move up higher, you'd want to see a breakout on the tips because that implies that you have inflation. Right now, what you're seeing is deflation, with the exception of grocery prices. Grocery prices are on the move. They are moving up higher. The dollar. Monthly chart. We've given up a lot of ground here on the dollar. Now, keep in mind, God darn it. Keep in mind that the dollar I'm going to find that window and close it because it's driving me crazy. The dollar had broken out back here. Where is that link? Sorry, folks. This is the joys of doing things live. Here it is, son of a gun. AOL of all things, which I don't even use. Okay, sorry about that. Okay, so the dollar matters to gold because it trades inversely of the dollar. Now, we broke out back here in March, attempted to rally up and through resistance at, let's call it 100 spot 60. We were rejected. Again, this month, no new monthly high this month. And we're still being rejected. We can't hold the 100 mark now. And watch the Stokes on a monthly basis. They're beginning to really weaken up here. So I don't want to call a top in the dollar just yet. But the dollar's coming under a lot of pressure. And when you have, let's face it, when you have the Federal Reserve Chairman going on 60 Minutes on a Sunday evening saying that all we need to do is just enter some digits on a computer keyboard and dollars are made. And he calls it money. It's not money. It's not real money. It's currency, right? It's fiat currency. You know, gold is money. The dollar is not money. It's a currency. So he likes to use the word printing money, but that's not the reality. What he's doing is diluting existing dollars. So, and frankly, it's theft. It's theft. And the way they get that money from us, thievery, is by rising inflation because we lose our purchasing power vis-a-vis the U.S. dollar. I digress. The VIX. We're off the lows of the week. Stubbornly holding that 2750 level. It looks like we may have another run here on the VIX. Let's go to a daily chart. Yeah, so it looks like we're setting up for a higher low. I thought one was setting up over here, but it was rejected. It did not hold. Do we have one here? We'll see. Now we had broken out of this downtrend. Now what I want to do is this. Create a secondary resistance level where we close right at today. And we'll create another primary resistance level where if we break through and close above, look out below for this market. We're having higher lows in RSI as well. So the VIX is firming up here quite a bit. And that does not bode well for the S&P 500. The Dow Transports, good week so far. Up nearly 9% on the week. But we are off the highs of the week. And we're seeing topping action. So, you know, while the trip Qs are one market, we have another market, which is the everything else market, right? While the trip Qs are very close to all-time highs, the transports are setting up for a classic bear market, lower high, until such time as we break out. And if we break out, then I'm wrong. But as it stands right now, I would side with the bear market rally thesis on the transports. The Dow, same deal here. I'm not going to bore you with drawing lines here, but same deal. Lower highs, weekly chart. We're off the highs of the week. We're still up we're up 3 1/3% on the week, which is a nice move. We're off the highs though. No breakout. We did put in a new weekly high. Volume is poised to roll in pretty good. The S&P 500 new weekly high, rejected at that 29.50 level, elusive, the 29.50 level. We were at a high this week of 29.80. Let's bring up the trip cues. Outside reversal day today. And they gave up support. So the trip cues are having a rough go here. They're up on the week still, about 2.5%. But we're off the highs of the week. And man, what a rally. Volume is going to come in light. Daily chart. Here's your outside reversal bar. And that 230 mark, they couldn't hold it. So we were stopped out of our short trade yesterday on a close above 230. Am I ready to re-enter it now? No, I don't think I'm going to short the triple Qs. I think I'm going to short the S&P 500 as a whole because they don't have the relative strength of the trip Qs. So I'm still bearish longer term on the trip Qs. And case in point, I know you say I'm crazy, but this is a very, very long-term analysis, right? I try to be like China sometimes, and I try to look out and play the long game. And if you take a look at the quarterly chart of Microsoft, which is the largest component of the trip Qs is Microsoft. Then comes Apple. And we have on RSI on a quarterly basis of 90.58. Think about that. And we have not put in a new quarterly high this quarter. So we are very, very overbought here from a high level view. A yearly chart, we have RSI 92.40. It's crazy. And we're leaning into the third standard deviation Bollinger Band on a yearly basis. So I think that that these shares can move down along with the triple Qs. If Microsoft goes, the triple Qs go. The banks, weak. Goldman was out, I think, along with JP Morgan, begging the Fed for more stimulus. So while yields are up on the week, so are the banks by about 4.5%. So that makes sense. Because the rising rates helps their NIM, net interest margins. Take a look at some comments here. Penn Gaming, yeah? Surprised. Well, you know what? I'm not surprised. Consumer discretionaries are outperforming the staples. I was surprised to see that. Semis. They gapped up higher, new weekly highs. We're coming off the highs of the week, though. Biotechs up on the week, but off the highs of the week. Energy up on the week, again off the highs of the week. So the theme of the evening and the theme of the week so far, as we proceed into the final trading day of the week, is that while we're up on the week, We're coming off the highs, and that means that we have selling pressure above. And that goes for the Qs as well. Oil. Big move up higher. Up 18.8% on the week. And if the dollar breaks, you're going to see oil continue higher. Emerging markets, they're moving up higher. Not my favorite place to be. I want to be in individual country names. I want to be in Vietnam, but not yet. I want to pull back. Look at Vietnam this week. I've been talking about this. They're up over 5.25%. India. Okay, there we go. India, bullish reversal bar on the week, but you saw a lot of selling at that 1873 mark. So as these shares pull back and come in, I want to create my own individual ETF of individual country names. We already began buying one this week. I posted it in the members area. And we'll be looking to add, I haven't done it yet because they've rallied. I want to pull back. We're going to be looking to buy Vietnam, Malaysia, and India. But on a pullback. And especially if the dollar breaks. We'd love to see the break in the dollar, then those names. Now, gold. Gold is having a rough go of it this week. Now, you could say, you know, we broke out last week. Could this be a retest of the breakout point? Definitely. Could definitely be that. But I'll tell you, lower highs on RSI, lower highs on Stoke RSI, volume, you know, is not good. I mean, up volume, you don't want to see, if you're bullish, you don't want to see big down volume, but volume of late has not been good, even to the upside. And we're losing momentum here on MACD. Daily chart. Big break today. Volume rose to the downside. Now, I mentioned earlier the 4-hour chart. Let's bring that up. Gold, 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 gold. There we go. 4-hour chart. Okay. So here's your trading range. Lower high. We pulled back, retested support, and we bounced. We held it into the close. We're up a little bit in the after hours session. So if you're interested in buying gold, now's your time. But if it breaks down below, if you're looking for a stop point, you know, if you want to keep it very, very tight, I would use a break below today's lows. If you want to keep it a little bit loose, then I would use, you know, a close below 1,700 on gold. But I just don't think longer term you can go wrong with it. But we may be setting up for a correction here. You know, the weekly chart is definitely more significant than what is a 4-hour chart. So I'm a little bit concerned about gold, but we have one more trading day left in the week. If we rally tomorrow, that may set the stage for a continuation move higher into next week. So we'll talk about it on Saturday. And we will formulate a strategy. Do we want to go adding to our gold mining trade, or is it time just to sit back, wait for better pricing? And we'll discuss that with members on Saturday. So more to come. So I like to set up on a 4-hour basis for a trade. Will we get it? Not quite sure. Meaning a breakout, a rally to this upper band of resistance and a breakout. Ideally, we get it. If you want to be conservative and you're looking for a place to enter, wait for a breakout above this upper band of resistance, which is at current around 1748, but it's declining. So I would just take your charting software, bring up a 4-hour chart, play connect the dots, and wait for a breakout above that resistance level. Tommy, do you see... Oh, Moderna. Yeah. And again, the media played along with that one. Now I believe they're in trouble. Hey, Franklin. Okay, so we're good on gold. Danny Haig, good to see you. Okay. So let's go back, wrap up the weekly charts. Then we'll do some chart requests, and we'll call it a night. Let's bring up the miners. I don't trade Nugget that much anymore, so we'll go to the gold mining index. You saw a nice bounce today, but we're still down over 2.5%. So I'm not being cavalier. We have hit resistance and we've backed off. So I want to see some firming up of pricing here on the miners and gold before I added any more to our position. So I'm in no great rush. Let's talk silver. I was tempted to step in today aggressively, but decided, wise move. Was cautious because we are well off the highs of the week. Stiff resistance here. And on a daily chart, we became very overbought. And I warned about this, that we kept rallying up into the third standard deviation Bollinger Band. I said it wasn't going to end well. In all probability, we're going to pull back further here on silver. Volume rose. Let's do some chart requests. Before we go to chart requests, I want to talk about China and the USA. We already know that the U.S. stock market is showing some signs of stalling out here a bit, especially the non-triple Q plays. I mean, over the last month, we've pretty much done nothing with the exception of the trip Qs. We've traded sideways. Now, this is coronavirus death globally. 333,000 people, 141. Every person counts, so I don't want to abbreviate it. This count is rising, and they want to deflect blame, meaning the Communist Chinese Party, who claim to only have 4,000 deaths, 4,600 deaths, relative to the United States with a death count of nearly 100,000 without firing a shot. Now, this is not going to be let go. And this is a global attack that the Chinese have unleashed. And I don't think that they did it purposely. I think it was avoidable, but they lied to protect their own 600 people. The Chinese Communist Party, roughly 600 people, out of a country of 1.3 billion, and they've killed hundreds of thousands of people. So the headlines, I'm not going to read all this. Beijing is finally running out of patience with Hong Kong. I bet. U.S. outrages China with $180 million torpedoes for Taiwan deal. Good for us. We need a balance of power there. Unlike anything else we've seen in history, the coronavirus will wipe out 4 years of GDP. If one thing is under the president's claw, is this. All of his bragging rights taken away with a snap of a finger as he goes into an election. Now, existing home sales plummet. 37% collapse in U.S. GDP. 2.4 million. I believe this is an overcount. Something's fishy with these numbers they're reporting. Massachusetts overreported today. Last week is Connecticut. Typical of these blue states. I don't know why they're blue. They're communists, for Christ's sakes. They should be red states, not blue states. More China news. They're gonna get delisted, or they're gonna pull these companies off the NASDAQ. More decoupling. No other truth. China is desperate for a sleepy Joe Biden to win. No doubt about it. So what are we looking for here to short China? Is it headlines? No, they help. Potential, forget this. Potential legislation. Senators introduce bills sanctioning Chinese officials and banks over Hong Kong crackdown. China needs U.S. dollars. The way they get those U.S. dollars is through Hong Kong. So this is a flashpoint. So have no doubt that this Hong Kong issue is going to become a very, very hot topic. The thing to remember, though, is that as we proceed into election season, they do not want Trump. They do not want him. They want Sleepy Joe. They want anybody else but President Trump. And I take that, where I am, as a compliment. The thing to remember, I worry about whether or not he's pushing his luck so early on, is that they produce a ton, if 3/4 of our pharmaceuticals. What if they slap a tariff on it? You know, they'll do something crazy like that just to have the public outrage that they can't get their medicine. And like that, he's lost an election. And we're stuck with whatever puppet is put in. So I'm nervous. I'm also nervous about the price of the stock market. I've been saying this. This is the Shiller PE ratio. We're very, very expensive. Near all-time highs. The median is 15.78. And we are at 27.72 with GDP plummeting. Scary stuff. So we are bearish on China and very, very cautious on the United States. The only thing the United States has going for it right now is the U.S. dollar. And if the dollar begins to slip and inflation creeps up, you want to see the Federal Reserve handcuffed. That's not going to be good. So let's bring up Yang and what we're looking for here. We were stopped out. We were long. We were stopped out. And thank goodness we were stopped out because the shares kept dropping. And they're still down below where we were stopped out. This is a weekly chart. And what we're looking for is a close at a bare minimum above 39.50. At a bare minimum. And then we'll revisit it. And then we'll formulate a strategy for getting back involved with the Yang. So I don't plan on buying it tomorrow unless, of course, it does the right thing and closes strong on the week. We'll not be aggressive buyers. We'll add in increments as it begins to behave and perform well. We'll add to our position. So that's the game plan with China. Let's talk about some chart requests. Oliver, surf. Let's clean this up. Surface Oncology. Whoa. Whoa. All right, let's do the higher level view thing. Significant breakout. Not a lot of data here. Weekly chart. A beautiful breakout, but I can't buy it. So the question then becomes, where would I? I'd be a buyer at 4.20. Ugh, can't type tonight. Oh, my cap lock is on. Long trade. Okay. So let's keep this active a couple of weeks. I think it's a beautiful breakout. But I can't buy it here because we're trading on a weekly and a daily basis above the third standard deviation Bollinger Band. So, as I always like to say, this is not going to end well. We're going to get a pullback here. And they've already started selling. So they sold off the highs of the morning. No attempted rally into the close. We closed off the lows of the 4-hour bar, but still not attractive. Too much risk, not enough reward. Let's bring up a raindrop chart. Yeah, very strong open. Horrible back half of the day. Daily chart. Okay. Yeah, I would let it come in. I see no rush to get involved here right now. Penn. I haven't thought about Penn National Gaming in a long time. Nice. Very, very nice. Woo. Go figure. So this is the resistance level to watch. 29.84. You want to see a close above that resistance level. And we are right there. Where do we close today? Yeah, we're right there. Weekly chart. Again, right at resistance. Beautiful rally. If you have profits here, I'd be making them real. And think about re-entering if we close above this resistance level. If nothing else, move your stop up. We're in a very tight trading range right now on a daily basis. I like it. For me to get involved, I would need to see a breakout above this 29.65 mark. 29.80. And I'm worried about consumer discretionary in this kind of market environment. I'm surprised that these shares are doing so well. Let's bring up Las Vegas Sands to see if this is a sector play. Or is this a one-off? I mean, Las Vegas Sands not doing well. Maybe there's some news out there. All right, what else do we have? Penn. Danny, smash the like button. Yes, smash the like button, please. Please. Tesla. TA. Whoa. Finally broke out. Nice. Let's bring up a weekly chart. Very, very nice. I think that in all probability, we're going to rally here. Despite the fact that we're down on the week. So I would watch for a couple of things. One, do we break out? Or two, do we pull back and test support? Okay. So those are the two things I'm watching for. Either A, pull back to that support level. That would be great. Nibble, stop loss just below. And then on a breakout above this resistance level here, wherever that might be, 830, but it's declining. That'll change. On a close above that level, I would look to buy. Yeah, put that link in the chat box. For your viewing pleasure, hit the like button, please. Who else do we have? Bob, what do you think about semiconductors being attached to Bitcoin price? That's the first time I heard that. Interesting. It seems like their rally was connected in the past 2 weeks. You know, we could look. Let's bring it up. Let's play a game. Let's do this. We'll go. We'll use a correlation. I did review. Yeah, I did review silver already. I'm worried about silver. I would let that pull back. I think ultimately it's going to break out, but we have resistance immediately above. I think it's at the 18 level on the SLV. But yeah, I did go over it already. All right, so when we're using the correlation field, and that's right here, we have Bitcoin relative to the semiconductor sector. Now, at current, there is a correlation. They correlate roughly, as it stands right now, about 25% of the times, 26% of the times. They were higher a few days ago. But over history, this is what's really important. Using a monthly chart, not there's a lot of data here because of Bitcoin. There's not enough data here really to... I guess there is. You could see that there was once far greater a correlation back here, 17, where we were trading on average at about 75% of the times. There was a correlation between Bitcoin and the semiconductors. So that would validate your thesis. At current, we're not as strong, but they're still fairly correlated about 55% of the times over a long period of time. Less correlated recently. So you're seeing a little bit of weakening at current. Now, what I'd be interested in is using the same chart with that current let's use a 55% correlation. Let's just bring up the spiders and do the same thing. It's about the same. 60% of the time, to be specific. So there's more of a correlation between Bitcoin and the S&P 500 by 2 bips. Now, what I want to do also here, I want to do 2 symbols. One is the XLK. Far greater a correlation to technology, not so much the semis, but the technology. And just out of curiosity, I want to bring up, if you didn't see that number is 64% correlation. And just to bore you to death with one more symbol, yes, I can be a geek. Even less correlated to the trip Qs versus technology, but more correlated to the trip Qs versus the S&P 500. So definitely a correlation. Nvidia, we were watching that going into the week. Bearish reversal bar. And this is why it pays. You know, if you're gonna trade based upon weekly charts, you know, it really pays not to chase a stock. And if you're going to chase a stock because it's a momentum trade, keep it small. Because, you know, if you bought at the open of the week, you know, we opened at 350 spot 42. We did move higher, but it's given up all those gains. And now we're negative on the week. Actually, no, we're still up. This is Trend Spider. We're still up by a few dollars, just reflecting that we're off the highs of the week. Daily chart. Yeah. I'm cautious right now, to be honest with you. If you're looking for an entry point, I would watch for and I think I have an alert set here. I do. Or I did. Oh, expired. It expired. Let's reset this. Because in this kind of market environment, you know, it's not the 1990s anymore. Momentum trading is a little bit too risky for me in this kind of market. All right, so I like Nvidia. We'll keep this active a bit longer. So this would be a sexy entry point because if we buy at the support level and it closes down below it, you want to stop out really, really quick. So Nvidia topping action. I don't like it at current. I liked it last week. I don't like it this week. And it's not poised to close well here. So I would be careful. I would not initiate a new trade. And that's for my man Franklin. RL, still discount for TrendSpider? Yeah, you can either get it through me. I have a discount. Or you can, I don't have the annual memberships that TrendSpider provides. So if you use the discount code below, and just use that link to go there, and you'll get, use that discount code, you get 25% off whatever you buy there. And that's good for as long as you're a member with them. You're welcome, Franklin. Denny, FAZ. Okay. I'm just looking to some comment. Oliver, thank you for the super chat. I didn't see that. Thank you, my friend. All right. You're welcome, RL. FAZ. We'll leave off with FAZ. Okay. Now, the FAZ is the leveraged ETF putting you short of the banks. And I'm going to caution about this one. And I'm going to bring you back to a chart. I don't want to see anybody losing money. So I always, in the back of my head, I always think about the correlations. What's working well? What's not working well? That could influence a trade that I'm looking to put on. Now, the 10-year yield, I'll get it right eventually. Here we go. The 10-year yield is bouncing. So for the benefit of those that are not familiar, banks make money on their NIM, net interest margins, right? Their NIM expands, their margins expand as yields rise. Makes sense. We pay more, the banks make money. Right? So whenever we pay more, the banks are doing well. So in this environment, on loans, with the exception of credit cards, they're not making money. They get servicing fees for mortgages. They're not making any money. So we have yet again, for the second consecutive week, actually third consecutive week, gapped up on the week. There's a tug of war going on out there between bulls and bears in the bond market. The Fed on one side, everybody that wants fair value on the opposite side. God forbid traders want to get paid for the risk they're putting on, right? God forbid. And that's exactly what's happening. People want to find fair value, and the Federal Reserve is not allowing them to do it. So this is why you're seeing this volatility. This is a long way of saying be careful of shorting the banks, because in the short term anyway, I think the Federal Reserve has the upper hand. Now, going to the chart, and they have the upper hand until they don't. One day, it's just going to stop. It's just going to end. And we're going to know about it. So we'll begin with the monthly chart. And you can see that we have a bearish reversal month so far. We have several trading days left to go. A lot can happen here. We have another month where we're down below. What was support is now resistance. We had broken out. Now it's failed. The only positive I could say here is that we haven't put in a new monthly low yet. Weekly chart. Excuse me. Now, on a weekly basis, we do have a new weekly low, and we're down below that support level. Obviously, we just went over that. So the obvious question that you want to have me to answer, so you don't have to ask it, is when would I buy? I would need to see a close above this resistance level. I would need to see yields come in. Now, if you go back early in the video, I did some analysis of the TLT, which is a 20-year bond ETF. It looks like it's getting ready to rally. So if it rallies, the probability of the rest of the bond market rallying is very high. So we had an update today, not a bad day today, in fact. An outside reversal day, a bullish reversal, a bullish engulfing day. But the key is that you don't want to buy these leveraged ETFs based upon price. They really need to be purchased on performance. Forget about the price. There's enough time decay in these things to choke a horse. So worry more about buying them right so that you have the derivatives that they're based off of working in your favor. Because when the shares are pulling back and even when they're not rallying, they're just stable or declining, those derivatives are losing value. These ETFs reset every single day. They have to repurchase those or reprice those derivatives. And you see time decay. So there's never a rush to get involved with them. You always want to buy on performance, and you're not getting it at current. So while we had a strong day, I need to keep in the back of my mind the fact that the yields on a weekly basis are rising. They're up on the week. They've broken out. That's a fact. It's almost in the books. A lot's got to happen between now and tomorrow for that not to be. And it could happen. So I'd keep an eye on the 10-year yield. If it pulls back or stabilizes and you see a rally up and through at current 25.20, I'd be a buyer, a nibble. I would be nibbling at that level. But I'd want to see, let's go to a weekly chart. I'd want to see a breakout above this upper band of resistance. And ideally, a breakout above the $30. What was price is this again? The high was $31.43. I'd like to see a rally up and through that resistance level. Why? The reason is that we've gone from putting in lower highs and lower lows to now putting in higher lows and then higher highs. So use your weekly chart as your guide. You're welcome, Rick. And there is the, thanks, Will. Folks, yeah, smash like, subscribe. Please, I beg of you. Trying to grow the channel. And Oliver, thanks for supporting the channel with the super chat. I really appreciate it. And with that, folks, everybody have a profitable trading day tomorrow. Have a great Memorial Day weekend. It's a long weekend. We all deserve the rest. Try to avoid the charts. Thank you, Denny. Appreciate it. Thank you very much for the comment. I really value that quite a bit. And thank you for spending your valuable time with me. I do value it quite a bit. So thank you, folks. And again, enjoy your weekend. Be safe and be well.